Hi, everyone. Welcome to the show. So, this first person is Ray Dalio, and he's a famous investor. So, listen to what he has to say.
Tulip bulb craze where people were spending a lot of guilders buying tulip bulbs, right? So that imploded, and the British came in and they built a big economy, and then they kind of went south a bit. They had the
Same
reserve
exact
currency.
pattern.
And then we came along. The United States became the biggest economy in the world around 1870, and since World War II, we've been the dominant economy. So now we have a lot of debt, you'd say?
Yeah.
29 trillion,
Good.
about that. So how are we going to pay off that debt, by the way?
Well,
Inflation is the only way?
in the end, it's always print the
Inflation.
money.
Okay.
You know, it's always print the money because you see, one man's debts are another man's assets. And so if you're holding a bond and you don't get compensated for inflation. Let's say people think cash is a low risk investment. Well, they're earning no interest. And when you have a 7% or a 5% inflation, you lose 5% of your buying power. Or if you're owning a bond, you have the same thing. And so what happens is not only is there the debt that is coming from the new debt created to run the deficits, but there become sellers of that debt because the owner, as an asset, it's not a good asset. And then there's so much selling. And what that means is that you either have to, interest rates have got to go up, and then that grinds things down to a close, or what they do is they have to print money. And so the history of all of these cycles is that the coffers are empty because you can't continue to spend more than you earn and give it to somebody, expect them to like it, and then you devalue it, and that becomes the cycle. And so you see the classic cycle of the ingredient is the cycle I'm talking about in terms of supply, demand, and the
All right,
debt.
so what you wanted to do is presumably let people know this is occurring, so maybe they could take action by letting their congressmen or governors know something about this or not?
Well, I think there are two things. What you can do to make a better society in your contribution, but also how you can individually take care of yourself in a situation that might be difficult.
Okay, so let's finish on the third part of the cycle. The third part of the cycle is somebody's rising up, and right now you would say China's rising up. Is that correct?
There's just numbers, and you look at it. And
okay, so if I want to do something about it, and I want to live in a time when China is not rising up so much, and we're better off in the U.S. economy, what should I do? Should I lobby my members of Congress not to print so much money? What should I do about it, if anything?
Well, again, it's...
Or the cycles are such you can't do much.
I think if we go back and we look at history, there are three main things that you can do, okay? First, as a society, individually and then collectively, how do you earn more money than you spend? And how do you build a balance sheet that has more assets than liabilities? That's a healthy, and so keeping that in mind. The second is internal conflict or cooperation. Can you have internal cooperation because you realize what the consequences are? So I think that in the 2024 elections, there is a reasonable chance that neither party will accept losing the elections. And that is something that means that democracy, or a type of civil war of sorts, could develop in a way, this is realistic, I'm not being exaggerated by that. And when one looks at those types of things, there is a worry that one should have about the divisiveness and what it means for each other. And the same is true internationally. So basically, anybody who has gone into wars, this through history, the people who are the most convinced that that's the thing to do, all regretted going into wars because of what wars are like. So the things that I would hope to convey is, first of all, what are the arcs? Is that right or wrong in the arcs? Measured, not opinionated. Just look at those measurements so that you could see that. And then as we think about it, like I have a principle. If you worry, you don't have to worry.
So Ray Dalio has written a book that studies the fall of empires, right? So what he's saying is the bonds right now are yielding less than what inflation is, and that's where we are in the cycle today, is that investors are getting a lower rate of interest than if they were to have it in some other type of asset. So logically, there's no sense for anyone to invest in a bond if they're going to lose in the long term, right? So we're at this point, and he says the next stage is another power rising while this is all happening. So that's where we kind of are today. Is the Fed is stuck between a rock and a hard place. We have interest rates at 0 and inflation at 7%, well over 7%, and their target's 2%. So they 3x their target, and they're talking about tightening, but they have to go over 7% in interest rates just to keep up with inflation for bond investors to actually want to invest in the bonds where they'll earn a return versus, just investing and losing. So this is Ray Dalio on crypto. So listen what he has to say.
I think it's interesting. I have a tiny percentage of my portfolio on it to diversify, but it is a very vulnerable incident because they can track who is operating at it. It can be tracked. It'll be outlawed probably by different governments, and in terms of its size, it has issues. So I think too much attention is spent on crypto, or somebody might be a gold bug, or somebody might be, I don't know, they hold gems or whatever they do. But I think that we're now in an era where we're going to have different types of money. We're going to question. Money is a medium of exchange, but it's also a storehold of wealth. And we're going to be questioning what are the right storehold of wealth in the value. And you're going to see around the world, not only the digital versions of that take place in many forms, you're going to see other forms of that competition, I think, in the years ahead.
We are not.
All right. So first of all, I disagree with the government parts of this. If governments really wanted to ban crypto, it would have already been done. So what we're seeing is it being absorbed through regulations, and crypto's not a threat because it is trackable. And since there's use cases involved with crypto, I think I think that's out of the equation right now. So the other part of this is he kind of describes the internet of value, right? Where we reevaluate what money is, and we think about what a store of wealth is and a medium of exchange. So if with Interledger, right, so with the internet of value, the idea is that I can pay for my lunch with a barrel of oil, tokenized barrel of oil, right? So we're moving into that world of digitization and tokenization, and people are going to redefine what money is. And at the same time, there's no need for a reserve currency in that type of model. So it also goes back to what he was saying about the fall of a great empire. So this next clip is Jesper Cole. He's a senior advisor at Wisdom Tree Asset Management. He's an economist. So listen to what he has to say.
Stepping in, right, thereby preventing the sort of Darwinian evolution, right? Because with interest rates as low as they are, with the government funded by the central bank issuing one support program after another, the zombie companies, right, can survive, and they can survive very well. And just to give you one statistics, if I'm halfway right in my calculations, now 73% of Americans, right, depend directly for the majority of their income from government handouts, which, by the way, is more than you have in the People's Republic of China. So actually, systemically, America is now socialist or communist, while China is much more free market. So this point about an economic cycle, and you don't have to be a Schumpeterian or of the Austrian school of economic thinking, sometimes the old need to go bankrupt, right? Sometimes the old need to go bankrupt, but that was never allowed, right? The bad financial institutions, except Lehman's, were not allowed to go bankrupt, right? They were bailed out in one way, form, shape, or another, and nobody went to prison for the mismanagement, right, of what happened in before. So I think Noah is right in terms of the rewriting of the governance, right, of fiscal support, of government support. Aya, what do you...
So the 2008 financial crisis affected the whole globe, right? And nobody went to jail over it. It was, it was a big scam, and the government ended up bailing out these banks and institutions that were involved with this scam. So the confidence in the U.S. in the U.S. economy has been cracked, right? The foundation of confidence has been cracked. The other thing he brings up is that the statistic of 70% of Americans rely on the government. Now, I couldn't find too much information on that. What I did find was that a large majority of U.S. citizens get refunds or they don't pay taxes at all. So right now we have this wealth gap where the majority of U.S. citizens are I wouldn't call it relying on the government, but they're able to not pay as much taxes and they're not able to contribute to the U.S. government, while the U.S. government keeps adding debt that needs to be paid back, or they need to print their way out of it, which ends in consequences. So listen to this as well.
There's one central bank that doesn't do any of this: the People's Republic of China. So if you talk about a worry about a decoupling on the global scene, right? Make no mistake, right? What the People's Republic of China is doing, right? The starting point obviously is very different because it's a communist command system where there was no such thing, as Noah mentioned, central bank independence, right? But in the current counter policy to the crisis, the one country that is not printing money is the Central Bank of the People's Republic of China. I want to thank you very much.
All right, so the People's Bank of China is tightening, right? They're rebalancing their balance sheet to make it attractive for investors to buy Chinese bonds. Now, if we boil down what money is a measurement of goods and services, right? So us printing money is just diluting the goods and services, how we account for goods and services. Now, China is set up with this geopolitical event with Russia and China right now are about to branch off from the dollar, and they're both set up to use central bank digital currencies, which takes away the need for a reserve currency. So if you wanted to buy goods from China, right, you don't need to hold the Chinese yuan. You could just convert something to their central bank digital currency and it instantly settles at the other end of it. So there's really no need for banks to hold on to the currency or anything. It just happens instantaneously. So I found that pretty interesting. Now, iTrust Capital has announced that they're going to support Axie Infinity. And Axie Infinity is a gaming blockchain game, play to earn, where you can buy these little monsters that battle each other out. So if you're interested in crypto IRAs, be sure to research them. And if you use my link, itrust.capital/Darren, you can earn up to $100 just for funding your account. So be sure to research iTrust Capital and be sure to research crypto IRAs. There's tax incentives for having them. Ray Dalio is saying. Now, if we look at what's going on with China and Russia, so listen to, read this if you don't speak Russian.
Что касается наших двусторонних отношений, то они развиваются действительно поступательно, в духе дружбы, стратегического партнерства. Они приобрели действительно беспрецедентный характер и являются примером достойных отношений, которые помогают развиваться друг другу и в то же время поддерживают друг друга в развитии.
All right, so Russia is working with China in an unprecedented way with, what did he say here? With bilateral relations, they are developing in a progressive way. So I found that an interesting choice of words. And what China and Russia are doing right now is they set up a trade relationship, and now they're pricing their oil in euros. So they're moving away from the dollar, right? And the petrodollar standard is every ounce of every drop of oil that's pumped out of the ground is priced in dollars. Now we have this relationship with Russia and China, and they're pricing their oil in euros. So this will take demand away from the dollars, right? So if everyone needs to have dollars to buy oil, and now this bilateral relationship with China and Russia, they're pricing their oil in euros. This is a big deal. And the other thing is Russia's central bank has added to their gold reserve. So they're up to 2,298 tons of gold, right? So their currency, their central bank's balance sheet is like around 30% gold right now. And I've read in OMFIF articles that their CBDC that they're working towards is going to be backed by gold. So we have Russia and China both ditching the dollar. China's getting rid of their debt. They're tightening, making monetary policy more tight. And China's a powerhouse in manufacturing, while Russia is rich in natural resources. So we're watching this branch off, and with CBDCs, right, there's no reason to have a reserve currency. If it settles instantly, right, you're not holding on to any of the currencies. It's just a medium of exchange. So we're taking that reserve currency element out of the equation. Back to what Ray Dalio is saying in the Internet of Value. Well, I'm saying the Internet of Value, but he was describing the Internet of Value. Now, King Solomon found this PDF that talks about Russia testing the RippleNet platform and to use XRP, and was talking about some of the design models and where some of the problems were, but they were testing RippleNet and the XRP ledger. So I found that pretty interesting. Now, this is Jack McDonald from PolySign. So listen to what he has to say.
Sort of funds. We were on the phone this morning with a fund out of Gibraltar, an $80 million fund, active in DeFi, active in the spot markets, and they've been using the exchanges that they trade with for custody. They're specifically looking for a regulated and insured custodian. That's where Standard Custody comes in, and also looking for a partner to help with some spot trading. And they were talking to Cowen about that, and that's a very typical type of conversation that we've been having of late.
Got it.
Gibraltar is a small British island that's progressive with their cryptocurrency laws and their distributed ledger technology laws. And this PDF talks about Gibraltar and other countries setting up funds within Gibraltar's law. So they're setting up infrastructure, and they talk about Israel working with Gibraltar for some of these DeFi funds, ICOs, etc., NFTs. So this country is very progressive. They're moving forward, and it sounds like PolySign is the place where they're looking for custody. So I found that pretty interesting. And what's really interesting is if you're a fan of the bear, the flag of Gibraltar looks pretty compelling. So I hope you guys enjoyed this video. Please tell me what you think in the comments below. I apologize that I haven't been making that many videos of late. I haven't feeling well, but now I'm feeling much better. So I'm gonna look for more information so I can share it with everyone. So let me know what you guys think. If you have any topics that you think I should cover, let me know. So have a good one, everyone.